Hello there. Welcome back to Financial Accounting N6. In this video, we want to look at the preparation of statement of cash flow or the cash flow statement. So we are having our question 4 that we want to look at here, which reads, start the information provided on Maersk Close Corporation below and answer the questions. So we're given Maersk Close Corporation, whereby we've got the statement of comprehensive income for the year ended 29 February 2016. So you need to go through this statement of comprehensive income. So going to the next page, you'd see that we are having a continuation of our question whereby we are having a statement of financial position at 29 February 2016, whereby we have got our two periods, that's 2015 and 2016, obviously, 2016 being the current period and 2015 being the previous period. So you also need to go through the balances that we are given here. Then on note one, we are given property and furniture, whereby we are given in terms of cost, acquisition, and book value for the two periods. Then beneath that, we are told that no property and furniture was bought during the year. Then furniture was sold during the year. Then lastly, we have got land and buildings were sold at cost price. So this is what we have. And then you'll see that we are also going to have a continuation of the question whereby we now have the required part of what is required in the question. It reads, draw up the following 4.1 statement of cash flow for the year ended 29 February 2016, and it's got 17 marks. Then beneath that, we have got some notes that needs to be prepared, which we are not going to look at according to this video. We're only going to look at 4.1, whereby we are having the statement of cash flow for the year ended 29 February 2016. So for 4.2, 4.3, and then 4.4, we've got the figures are being pre-entered in the cash flow statement that we're going to prepare for the first part there. So going there to our answer section, you'd see that we have those figures there already there pre-entered. So this is just for the sake of this video. So going back there, let's just try to see. This is our statement of cash flow, and we've got the figures for cash received from clients being there, 89,200, cash paid to suppliers and employees, and 212,620. So remember, those figures are there calculated in the notes out of the statement of cash flow. Then if you add the cash received from clients plus the cash paid to suppliers and employees, that is a positive 389,200 minus 212,720, you're going to get you 176,508. So this is now the cash generated from operations. So beneath that now, we're going to give a continuation of our statement of cash flow, whereby now we are going to the section of looking for other operating activities that we are having in the question. And if you go to our income statement at the beginning, that's where we're going to notice some of the operating activities that we have. If you go there, you'll see that we have got interest receipts. It's also part of our operating activities. So we can just carry our 4,000. And remember, this is a cash inflow. Remember, like the statement of cash flow records actual cash movements in and out of the business. So whenever we're having an inflow, we're going to show it as a positive in the statement of cash flow. Whenever there's an outflow, we show it as a negative. So in this case, interest received is something that we are receiving. So we're going to show it as a positive, showing cash inflow. So we go there and put that interest received. So here we are saying the next item that we can put there is interest received. So we are saying interest received. And the figure that we are using is 4,000, which is a positive, so you can just write it as 4,000. So I'll go back to see what other income can we adjust from that. So we go to if you go down, you'd see that we have got salary to members, which is 96,000. It's also part of our operating activities, which is an outflow, obviously, because it's under expenses. So we're going to say show it as a negative salary to member to members, which is 96,000 as a negative. So we go there, say salary. Salary to members. Yeah, the figure that we have there is 96,000, so we show it as 96,000 as a negative. And then we can go back to check another flow out besides our salary to members. We have what interest on members' loans, 20,700, which is here. Interest on members' loans, It's also this is a payment, so we'll show it as a negative again. It's outflow. We got there. We can say interest on members' loans. For the figure that we have for interest on our members' loans, we have got 10,700. Obviously, we are saying these two figures are showing outflows, so we are going to show them as negative, so we can just put some brackets. Then we go back again, checking in other item that is there in the income statement that is going to affect our operating activities. We go there. You see that the next item that we are having there is taxation. So taxation and distribution of members. This is taxation and distribution of members. So these are the two items that we are going to calculate there. So we go there and check. So the taxation and distribution of members, we are not going to take the figures as they are, because we need to adjust in terms of opening balances of prepayments and accruals, and then closing balances, and then we can be able to find the actual amount that was paid for taxation, for example. I remember we might have some accruals at the beginning, or prepayments at the beginning of taxation, and then at the end we have the same scenario. So we need the actual. Remember, we are in the statement of cash flow. We are recording actual cash movement, so we can just make a calculation. So we go to our statement of financial position or our balance sheet to check in terms of the opening and closing balances of taxation. So for taxation, it can be under current assets, or it can be under current liability. So if you go to our current assets, you see that we have no issue of taxation. But if you come here under current liabilities, you'll see that we have got taxation being indicated there as a receiver of revenue. This one is our taxation, receiver of revenue. So it's under current liabilities, so it means it's an accrual of taxation. We have got remember our years. We can just maybe try to refer back, check the columns that we have there. But we have 2015 and 2016. So it means 2015 is the opening and 2016 is closing. So we've got an opening balance of an accrual of taxation, which is 2,200, and then we've got the closing, which is 15,280. So basically, on the calculation, we are going to say the balance at the beginning of an accrual under current liability. The balance at the beginning of an accrual under current liability, we add the taxation for the period, and then we add the taxation for the period, then we subtract the balance at the end. In other words, we are saying opening balance of an accrual plus the taxation amount for the period minus closing balance of the accrual. So taxation for the period, to get it in the statement of comprehensive income, the one that was charged in statement of comprehensive income. So basically, we are here. We are saying taxation. Remember, we're saying balance at the beginning if it's an accrual. We are saying 2,200. So here we are putting 2,200. Then we add taxation for the period, which we get in the statement of comprehensive income, which we are given here is taxation, which is 27,884. $27,884, and we less taxation at the end, which we get in the statement of financial position. Remember, our taxation is here. So at the end is 15,280. So we subtract it. Uh, 15,280. So we calculate the 2,200 plus 27,884 minus 15,280. You are going to get 14,804. 14,000. 804. So this is an outflow again because we are paying, so we show it as a negative. So you'd see that for taxation, it might not be under our current liabilities. Maybe we have something that is under taxation being under current assets. What it means is it means there is a prepayment. So we just do the opposite of what we've done here. If we have opening balance, remember I said opening balance plus taxation for the period. So if it's under current assets, it means it's a payment in advance or a prepayment. So we don't show it as a positive here. The opening balance will be we just show it as a negative. And then the opposite is true to the closing balance. If you have got a closing balance here, which means here we are showing it as a negative, so we show it as a positive. As simple as that. So we go there and we see that the next item that we want to calculate is now distribution to members. So distribution to members, we are also going to do the same thing, whereby we are saying, let's just put the description there of saying distribution. Distribution to members. So we are saying balance at the beginning of distribution to members. We are also having the other current liabilities. We do the same thing, opening balance 2,180. We say opening balance 2,180 in brackets 2,180. Then we add distribution for the period that we are having in the statement of comprehensive income, which is here, which we are having as 24,000. So we go there and we add our 24,000. And then we subtract taxation at the end of the year. So we come here, we see that taxation at the end of the year is 15,208. It's a 12,030, sorry, 12,030 here. So we are saying, so basically we are saying 2,108 plus 24,000 minus 12,600. We calculate it there, you're going to get 13,580. So we have got 13,580. So these are the last items that we have under operating. So we can add, whereby we are adding from, let's just try to bring our page down. We are saying our 176,580 is a positive. We add your 4,000, subtract your 96,000, subtract your 20,704, we subtract 14,804. And then you also subtract 13,580. Remember, it's a outflow, so here you subtract again. And then the final figure that you are supposed to get to come here is net cash flow from operating activities. So if you make the calculation there, you are going to see that you will get a positive figure of 35,000. 35,484, which is going to be our net cash flow from operating activities. Net cash flow from operating activities. So this is what we have also, net cash flow from operating activities. Then from there, we are now going to our next category, which is now for investing activities. So we are saying the next item is cash flow from investing activities. So cash flow from investing activities, remember we're looking for proceeds from sale of non-current assets, and then purchase of non-current assets, they're part of investing activities. Maturity of investments are also part of our investing activities. So those are the items that we are going to look for. So obviously, we go there and try to see in terms of in terms of those under the statement of financial position, which is here. So the first that we want to see, we go to the notes for that current assets, which is here. That's where you can get the information, whereby we are told that no property furniture was bought during the year. Furniture was sold during the year. So we want to see it was sold for how much, and then landed buildings were sold at cost price. So we are going to have proceeds from sale of landed buildings. It is simplest of the calculations. Proceeds from sale of landed buildings, because they are being said they were sold at cost price. So we're going to say the cost price that we have for the current period, which is 2016. We have got a cost price for landed buildings of 480,000, and we subtract it from what we had at the beginning of the year, is 885,320, and then we get our proceeds for the period, whereby we are saying here we just say proceeds from sale of landed buildings. From the sale of land whereby we are saying, in brackets, the cost that we had for landed buildings, I will just maybe try to, the cost that we had is 885,320, 885,320 here. Then you subtract 480,000. That is the cost at the end. Then we get the cost that we sold for. So we subtract there the figure that we are supposed to get. It's going to be 405. The proceeds that we are going to get here is going to be 405,320. Remember, we're going to show it as a positive because this is an inflow. We are selling, so we are receiving, so it becomes an inflow. So it's 405,320. Then I will also have also furniture that was disposed there, whereby we are saying here we are saying the furniture was sold during the year. So we've got also proceeds from sale of furniture. So we can just go there and indicate it, and we calculate for how much proceeds from sale of furniture. So we are just going to there we are now going to we are not given any hint that is there in the explanation in terms of how can we arrive at those proceeds, but we can use the formula of the T account, whereby we are saying, remember, when we open a T account of the non-current asset account, and then we show our opening balance and book value on the debt side. We know that this opening balance is here for 2015, which is here 1,041,320. And we show the closing balance and book value, which is here 542,868 on the credit. We've got 542,868 on the credit. And then the depreciation for the period, we put it on the credit side. So if you go back there, you'll see that depreciation for the period we're given it here, 19,480. So we put it on the credit side. 19,408. And then if you calculate it like this, and then in that case, we can now be able to find the value of disposal. So to get the value of disposal there, this is disposal at carrying value. We get disposal at carrying value. Remember, the other element that should be on the credit is the disposal at carrying value. So to get that amount of disposal at carrying value should be on the credit side. So that's the figure that we are looking for. So we can just say opening balance, putting it down to put it in an equation. We are saying opening balance to get this figure, to arrive at this figure. We are just going to say our opening balance 1,041,320 opening balance. We subtract your closing balance 542,868, and then we subtract your depreciation for the year 19,408. So we calculate it like that and see the figure that we are supposed to get there. We are saying 1,041,320, and then we subtract 542,868, and then we subtract 19,408. And then the answer that we are going to get is 479,044. So this is our disposal at carrying value of all the non-current assets. So we've got 479,000. We can just maybe try to put it here. 479,044. But inside this 479,044, remember we've got also a disposal that took place of land and buildings, but they were at cost price. So we remove the disposal that are transferred of land and buildings, so that we remain with the disposal of furniture. So disposal of land and buildings, it was 405,320. So we subtract it from there, 405,320. So subtract it, see what we get there. 405,320. And we are going to get your 73,724. So this is now disposal of furniture at carrying value. So at carrying value, it means there was no profit that was made. But to get your carrying value, you say carrying value is supposed to be your cost minus accumulated depreciation. So it means when we say our cost minus accumulated depreciation, that's when we get the carrying value. So if there's a profit, we would have sold above the carrying value. For example, our carrying value is 50. And if we make a profit of 20, it means our selling price was 50 plus 20, which is 70. But if we made a loss of maybe, let's say, of 5, we're supposed to say 50 the carrying value minus the loss. So it means we sold it at 45. So in this case, our carrying value is 73,724. And if you go to the settlement of comprehensive income, we know that there was a loss on furniture of 10,000, which means we're going to subtract 10,000 from that figure. So we're going to say 73,724 minus 10,000. Get the amount that we sold for, and we get your 63,724. So this is the proceeds from the sale of furniture. So we go there. So we are saying 63,724. And obviously, we try to look for other investing activities that we can get there. In our question, let's go to statement of financial position, obviously, under non-current assets. Right. We are having some investments with 12,000 at the beginning of the year, but there's nothing. So this means this is a maturity of investment. It is a decrease of investment, which is showing a maturity of investment. So it means it's an inflow of 20,000. Because if you say 20,000 minus 0, you get your 10,000. So we have an inflow of 10,000, which we are going to show is a positive again. So it means under investing, we are only having positives. So we can try to maybe remove this. So here the description that we are going to give is that there is a maturity of investment. So we are saying proceeds from the maturity of investments. And then the figure that we have are there from proceeds from the maturity of investment. Remember, it's 20,000. So we're going to say 10,000 as a positive. So these are the three that we have in terms of investment activities. So we can add the three. 405,320 plus 63,724 plus 20,000. Then we get a total of 489,044, which is a positive. So we are saying 489,044. And we are saying this figure is representing your net cash flow from investing activities. Net cash flow from investing activities. So this is what we have. So we have net cash flow from investing activities being 489,044. So there is that. Now we go to the last part, which is of net. We go to our cash flow from financing activities. Cash flow from financing activities. So we are saying cash flow from financing activities. So cash flow from financing activities, we are looking for issues like loans, changes in loan. Is it an increase or decrease? And also we have if you have got any additional member contributions, we can also include them there. So we go there and try to see in terms of our statement of financial position. That's where we're going to identify those elements. We go there under long-term liabilities and other equity and liabilities section. And that's where we're going to find our members' contribution and see that there's an addition. Remember, this is 2015, this is 2016, so it increased from 180,000 to 210,000. So there's an additional member contribution there of 210,000 minus 180,000. So we say additional member contribution. And we are saying 210,000 minus 180,000. And then we show it as a when it increases as an addition, we are going to show it as a positive. So we are going to say if you subcalculate, they are going to get 30,000. So it's a positive 30,000. Then we check for loan. Is it an increase or a decrease? If it's an increase, also it's a positive because we are receiving more from loan. We're saying the loan is actually decreased from 900,840 to 302,332, which indicates a decrease in loan, which is a repayment of loan. So it is an outflow. So we are saying repayment of loan. So here we are saying repayment. And then we can just check the calculations, whereby we are saying it's from 900,840 then we subtract the one for the current period, which is 302,332. So if you calculate there, you're going to get your 598,000. Maybe we can just try to calculate by saying 900,840 minus 302,332. And then the figure that you're going to get is 598,508. 598,508. And this one is an outflow because we are repaying the loan. So with those two, we can now try to find the net figure there by saying 30,000 minus 598,502. Obviously, you are going to get a negative figure there, which is going to be 568,508. And it's in brackets, so that is a negative one. So we go there. On the description now, we are saying this is now net cash flow from financing activities. So here we are saying net cash flow from financing activities. So now we want to calculate now the is it an increase in cash or a decrease in cash? You can find it by saying the net for operating was a positive 35,484. You add here it was a positive, we add it 489,044, and then you subtract the final for financing, which is a negative minus 568,508. Then we are going to say that the figure that we are going to get is a decrease, which is going to be a negative, which we are going to put here as our 3,980, and we are saying it's a negative. So here the description that we are going to give, it's net decrease in cash. Then we are supposed to add cash at the beginning. Cash at the beginning of the year. At the beginning of year, we get it again in the statement of financial position, whereby we say cash at the beginning of the year we are having. You check cash, we have got 10,780. That's the cash that we have. You check if you have an overdraft at the beginning, we don't have it's a dash yet. So we're only going to have our 10,780 as at the beginning, which we are supposed to add there. So it as a positive. We are so now saying 10,780. So we now say negative minus 43,980 plus 10,780. You're going to get your final answer is negative 33,200. So show it in brackets. So this is going to be your final figure. And here you can just underline so that you are getting your final figure. So on the description, we are saying this is now the cash at the end of the year. So here we are saying cash at the end of year. So which is our 33,200. So basically we are saying this figure that we have here should be the same with the final figure that we have for cash in the statement of financial position. So we're going to check, is it 33,000 negative 33,200? We go there in the statement of financial position and see that at the end we have got nothing under current assets. If we had a balance under current assets, we would say that it's a positive. But if you go down, we see that we've got a figure for bank overdraft, negative 30,200, which is the same figure that we got there as our final balance of cash, which indicates that we have done our statement of cash flow correctly. This is a overdraft of 30,200, which represents a negative balance of 30,200, which is the same figure that we are having here in brackets, meaning it's a negative 30,200. So this is what you guys are got in this video on the preparation of the statement of cash flow. Let's stay tuned for more videos. More typical examination questions are going to be uploaded on this channel. Let's subscribe and share. Let's turn on the notification button so that when we upload new videos, you get notified. As for this video, I'm signing out. Let's meet again in the next video.